Chances are, if your business is an S corporation, you may have violated the tax code each year and you don't even realize. There's a little known compliance step that can cost you and your employees thousands of dollars in taxes if you get audited. If you're gonna reimburse yourself or your employees for expenses like supplies, mileage, auto expenses, cell phone, your own home office, meals, travel that you've been paying out of your own pocket, you need to have an accountable plan. Why? Because without one, the IRS has the authority to reclassify the entire reimbursement as additional wages to you or your employees. You effectively lose the deduction. Now, in the case of the owner, this would be a brutal outcome because you'd lose out on the value of writing the expenses off. It would be an expense for the business, but then it's income to you on your W-2. And if it were to happen to your employees, it's still a pretty bad outcome. Not just because now the employee will have a higher tax bill, but also because you have to pay additional payroll taxes, which will come out to 7.65% on the entire reimbursement. So what do you need to know to stay compliant and not risk additional taxes for you and your employees? Well, the IRS has 3 rules you or your employees need to follow for their reimbursement to count as an accountable plan. 1, they must have paid for the expenses while performing services for the business. The reimbursement must be payment for the expenses only and not an amount that would have otherwise been paid as wages. 2, they must substantiate these expenses to the business within a reasonable period of time, provide receipts, whatever. And 3, they must return any amounts in excess of the substantiated expenses within a reasonable period of time. So if you pay them too much, they need to give it back. They didn't actually spend that much. Now, if you get audited and your employee or self-reimbursements didn't strictly follow those rules, the reimbursement falls into non-accountable plan territory where you end up paying additional taxes that are easily avoidable.